because the US is not going to decrease its interest rate that fast and this kind of things. Is this something? And just because the jobs are good, what about the consumer? Are they healthy? Okay, are the consumers healthy? This is I think it's a very important question that everybody should slowly understand. Now, first of all, on Friday, the US labor market reported exceptionally strong figures for January. Very, very strong. So non-farm payroll significantly exceeded expectations, jumping by 353,000 against a forecast of 187,000. Now, not only that, there was also one more news that kind of surprised everyone, and that one is December's employment figures. They were revised upwards to 333,000. Now, then if you look at this, we would have 2 months, 1 and 2 months of 300,000 down. This is not something I would say anyone can just poo-poo and say, oh, it's nothing. It is a huge thing to have 2 months of 300K and above. Even 200K is impressive, but this is like 300K and above. So what does that point to? Is okay, so one thing's for sure, labor market continues to be resilient. Okay, continues to be really, really strong, right? So now, not only that, what we also have is the average hourly earnings. It experienced a notable increase of 0.6%, while the unemployment rate held steady at 3.7%. So this is going up and this is holding steady. Okay, when expectations of a rise to 3.8 was there, but it did not. It went to it maintained at 3.7%. This is definitely a robust combination of job growth, wage increases, stable unemployment underscores the US economy's strength, right? Now this is real developments right over here. Okay, positive so far. So such positive labor market data diminishes the likelihood of a Federal Reserve easing monetary policy in March. And because of that, right after the news, you saw the dollar index started creeping up, even though there was this swing up and swing down. This is normal to take out all. Let's see, this initial movement was the big boys, but they didn't want to continue because there are still some trades missing right over here. So it's them clearing that comeback take before it goes up, and that was what actually happened on the dollar index. Okay. Now, in his statement, Chair Jerome Powell expressed ongoing concerns regarding high inflation's impact, especially on lower-income consumers. Now, this suggests that the central bank may face a more complex path in adjusting interest rates than previous thoughts. Now, if you look into detail, this part over here, because everybody's thinking like, wow, 300K, that's a good thing. Well, despite the strong January employment figures, there are nuances to consider. I'll bring up for everybody to think of now. If you look into detail into all this non-farm data over here, a significant portion of the jobs addition are part-time positions. And is when we talk about part-time, the question here is that, is this stable? Is there stability in part-time work? Now, not only that, if you look also some of the data that come out, average work week, right, decreased to 34.1 hours. Now, these figures are often associated with recessionary conditions, right? So now suddenly from good news is like, hey, I think we need to see a bit more to decide, right? So 300K, is it a good thing? Now, that is a question mark because most of them are part-time, okay? So now let's move on to the next part of it. Now, that's why it's important. Just now I was telling you guys, right? Both ISM manufacturing and services sector surveys are in contraction, okay? And suggesting potential job losses ahead. So if ISM services employment index continues to decline in the next 1 hour, we will see it could raise concerns about future employment trends. And now, why am I focusing on this ISM services? Like I said just now, we are talking about the US being a service-based industry, right? So that is important. Now, if you look at the December data, we had a 52 point. Let me write it down over here so you will see. In the December ISM, we had a 52.7, right? Then what happened next was that in January, it dropped to 50.6. Okay, it dropped to 50.6. Now, what the forecast for the February one, the one's gonna come out in about 1 hour 50 minutes. They are forecasting a 52. That means this is recovering a bit. Now, if we have anything that's lower than this, then you would see the dollar index starts coming down, right? Because it's something like, hey, the the jobs, are they secure? Now you already have all these part-time things happening. So is this going to be secure? So this is a crucial number, and if it drops below 50, is even going to be worse. Okay, so this part now slowly, I think it's crucial for everybody to understand, right? So the Federal Reserve's recent finding revealed that US consumers did not reduce their spending during the past holidays in December, and leading to near record levels of debt. So is that a good thing? All right, over here. So your jobs, whether you are holding steady jobs or not, it's not that steady. Not really that steady. The increments are not that steady. And then you have work week decreasing. So if you are paid by the hour, I don't see how you're going to make much more, right? And this kind of hours is just, like I said, recessionary conditions, hours associated with those periods of time. Now, if you add this with their spending, wow, okay, it could be a recipe for disaster. Now, if you look at the overall consumer borrowing, what happened was it surged to 23.75 billion in November, far surpassing the 9 billion increase anticipated by economists and pushing total outstanding credit balance above the 5 trillion mark for the first time in history, right? So you can spend, no problem. Are you able to pay back? So a quick look at the credit card, right? Delinquency over here. Now, I think you all realize that I have been showing this chart from time to time. Now, have you ever seen me showing to you this thing coming down? What we are seeing is just going up, up and away, something like Superman, right? Now, the rise in delinquency represents an alarming signal for consumers' financial health. That is for credit card. What about the consumer loans? The other consumer loans. Look at the chart. Same thing over here, also increasing, surpassing pre-pandemic figures as well, right? So it's really concerning for the consumer sector, whether you like it or not. So although higher balances, some may argue on revolving debt could indicate a growing population, more widespread credit card usage, and increased consumer spending that fuels the economy, the current loan delinquency data from Federal Reserve economic data, or in short, the FRED, right, does not support this optimistic interpretation saying that, growing population, increased consumer spending fuels the economy kind of thing. Yep, it is, but the question is, I don't think it's sustainable. That's why I say it does not support this at all. Instead, it suggests potential financial instability, especially if employment figures begin to deteriorate. Now, this is what I think. Okay. So, as for the Federal Reserve monetary policy, the possibility of an interest rate cut in March seems unlikely unless there's a resurgence of financial system stress. Okay, so however, the prospect of a rate reduction in May, June remains a possibility in light of the current challenges in consumer financial health. So we're not going to see probably won't see rate cut here, which everybody thinks it would happen earlier on, but we here, we don't believe in it. So probably May and June, if the, that field economy don't really do well in high interest rate environments. Okay, they have to pay much more, and if there's too much interest rates settlements to settle, then there won't be enough money for the government to spend, and they don't like that. They need to spend to ensure that they are elected again as the next government. Okay, so understand this and probably expect this to happen then. So, but that by this time, what you're going to see also, you have the big bunch of other major currencies also going through the rate cutting exercises. So that will be some interesting times ahead. Yeah. So with that, that's the end of the report over here. Let's move on to the charts.